Hey guys, so the markets have opened up today on Monday morning fairly buoyant. We've got the S&P up about 0.6%, we've got the Nasdaq up almost 1%, and the Dow Jones is pretty flat. Now, all this despite a really tentative month coming up, which we're going to touch upon. We've also just had the Dallas Manufacturing Index come in at 9 versus 27.3, so that's sunk. And we also had pending home sales dropping really unexpectedly in July, which is maybe signs that the housing market is finally starting to slow down. Now, buyers are citing higher prices, but could this just be that COVID is actually having an impact on the real estate market? Now, why is it that we are still up despite a few of these kind of metrics coming in on the downside? Well, it seems like the market really did take well to the Jackson Hole Symposium on Friday, and in particular, Jerome Powell's remarks. Now, Jerome Powell did two things really well, in my opinion, on Friday, and that's what's helping equities to remain buoyed. And the first of it was that in the lead up, and we spoke about this and we broken down the Jackson Hole Symposium on a separate video, so please do go check that out. But in the lead up to Jerome Powell's remarks and the symposium, Jerome Powell very cleverly sent a lot of his Fed governors in the weeks beforehand on CNBC, on the news, and they put a hawkish stance forward. In other words, they were told to let the market expect taper, speak aggressively, talk about the taper's imminent, we should be aggressive, we should start reducing our accommodative monetary policies. But then Jerome Powell very smartly came in and nullified it and played the good cop and said, no, we don't want to come off too soon. COVID is still lingering, etc., and we don't need to taper just yet. But he did still say in his remarks that we could see taper at this side of this year. So some of the investors, some of the markets are starting to price this into next year now, thinking tapering won't start till next year. But I feel like he's still got some maneuverability to do it this year. And he made that clear in his remarks. The second thing he did really well was he understood that the equity markets were really tentative about inflation, and he knows that their primary concern right now is inflation. It has been for a good few months. And in all his remarks, he's always been very careful around how he's tackled inflation. And what he did smartly was the way he played it down without actually giving us any more evidence that it is indeed transitory. If you remember, in my breakdown, we looked at how he spoke about the 1950s example, where he mentioned that you shouldn't combat transitory inflation too soon because it can end up having a lag, and that impact could have the opposite of what you're trying to do in the economy. And then he also spoke in the 1970s about where there was an example of transitory inflation, and if you don't do anything, it can then lead to core CPI inflation, even though it was just a few things causing the inflation in the first place. So he used the 1950s and the 1970s examples to try to give us some parallels to the challenge he's facing now. And how he kind of summarized was, he said we need more data. And what does he mean by more data? The two key pieces of data we're going to see, and the first is coming up on Friday, and it's going to be super anticipated, are the non-farm payrolls for August. So that's going to be coming on Friday, September the 3rd. And then on the 14th, we're going to get another CPI reading. So these are the two figures, plus others, that Jerome Powell will be really focusing on, and the markets will be focused on as well. Now, the consensus estimate for the non-farm payrolls are 753,000 extra new non-farm payrolls to come back in the month of August. That was versus 943 in July, so they're expecting a slight pullback, but that would make it the 8th month of gains, and that would give Jerome Powell enough confidence. A lot of governors are saying it should give him enough confidence to start the taper, and a lot of the Fed governors are coming out and saying, if we see one more good jobs report, we want to see tapering. That's not what Jerome Powell has said, but maybe that could be. If we get another good jobs figure and another good CPI reading showing that we've inflected down, then perhaps tapering can begin. Now, the other interesting thing we want to speak about is September historically has been the worst month of the year for the S&P. So normally on average from 1945, the statistics show that it falls on average 0.56%. But it's a bit weird this time because we've got so much momentum on the S&P front that the stocks have been on its 52nd record closing high of the year on Friday. That was the 52nd of the year, and it's gained 20% so far in 2021. And we've gone 287 calendar days without a 5% correction. And we've spoken about this a lot. Normally we expect a healthy 5% correction in the S&P every so often. We've gone 287 days without that. But still, we're not sure if we're going to get one. We know it's going to be a bit of a tentative month, given what's going on and expecting the new data readings to come in. But are we going to see a level of fall? That's not sure. One thing we have seen as an indicator is that margin has started to reduce. So investors have started to cut back their margin. The margin figure fell 4.3% to 844 billion in July. I think it was the first time it's ticked down in a long time. And that's even though the S&P has picked up 2% in that time. So investors are starting to get a little bit more cautious. Perhaps investors are starting to expect a bit of a correction. But the question we will need to understand is that actually, if we do see a dip here in September, is that going to be a buying opportunity? That's what I'm waiting for. Are we going to get a buying opportunity with the COVID issues? There's going to be the backdrop of COVID. We're going to still see some more geopolitical uncertainty with the whole thing in Afghanistan. We've seen some news headlines about Russia, so that will create some uncertainty in the market. We know we're waiting for this job figure on Friday. What impact could that have on the market? Mid the month on the 14th of September, we're going to get the CPI reading. And then the week after, on the 21st and 22nd, the Fed are going to convene again. And then it's going to again have the market spooked to see, are they going to suddenly announce taper? That's what we're looking out for in this month. So there you go, guys. That's an update on the market. We're looking buoyed. Equities are doing well thanks to Jerome Powell. He's got and saved the day. But for how much longer? And more importantly, will the markets have a taper tantrum? Or will they understand that tapering is inevitable and it's going to happen soon? Thanks for watching this video. We'll see you in the next one.